Today on the Joseph Carlson Show, stocks are getting crushed. The overall market is falling. Amazon is back down to 194, down 3.3% today. That's a pretty big drop even for Amazon. Google's down by over 3% as well to 158. Tesla's in the red, down 2.6%. Microsoft is now down 2%, down to 382. Meta's down 2.8%. Netflix is down over 3%. And even companies like Costco, the more defensive ones, are still trading down 0.7%. We have more evidence that consumers are worried about the economy. The University of Michigan survey, for example, had the poorest results since 2022. We'll be looking at some of the economic anxieties that consumers have. And it's not just consumers that are concerned. We also have CEOs, leaders of companies, saying that they're cautious about the future. Lululemon stock is down big today. Now, not everyone agrees that there's going to be a big slowdown in the economy this year. We have, for example, Tom Lee, who, you're never going to believe this, he thinks it's a buying opportunity, and we'll get his reasoning why. We also have the news that in one of the biggest possible miscarriages of justice, we have Trevor Milton, the founder of Nikola, who was found guilty on multiple counts of securities fraud. He had a lot of deception. He said things that were knowingly false and misleading to investors on multiple occasions. That's what he was found guilty of. He received a full pardon. So he doesn't have to worry about the 4-year prison sentence that he was sentenced to. We'll be looking over some of the specific things he was found guilty for. We also have the news that the very popular communication tool, Discord, the thing that most people use for internet communities, is planning to IPO. Currently, the company is a privately owned company. They are working with Goldman Sachs towards an IPO. And I want to go over why, if this happens, I will likely be buying shares of this IPO. And then finally, we have news that's a warning sign for Hollywood that younger consumers are choosing creator content over premium TV and movies. What does this mean for companies like Disney, Netflix, Amazon Prime Video, and Apple TV Plus? What does it mean for companies like YouTube, TikTok, Facebook? We'll be going over it today. So we have a lot to get to in this episode. Let's go ahead and jump in. Now, if you look at your portfolios today, you better be warned. Most of your favorite companies are going to be on a deal. They're going to be a bit cheaper than they were yesterday. If I look at my companies, many of them are hanging on well. They're doing okay. We have companies like S&P Global that are just going right along without too much of a problem. We have MasterCard. This one's always been great. We have Intuit, which this one has been a lot more volatile. I made a lot of gains really quick in Intuit, and then it's cooled off for the past year. The bigger issues are when we get into the tech category. A lot of technology companies are selling off. Microsoft is trading down. The gains in this one used to be a little bit higher. Microsoft was above $400 per share, and it's pulled back a bit. The other companies that are in the red are my 3 most recent additions: Salesforce, Google, and ASML. I've bought all of these companies recently, within the past year. So Salesforce being a new addition, it's currently flat right now. The stock went way up with some enthusiasm, and then it pulled back. We have Google that showed the same trend, trading well above $200 per share, now trading way back down. ASML has always been volatile, but right now the dip continues. In the consumer category, Costco and Booking Holdings have held up rather well. Costco continues to trade at a relative premium over other great companies. I'm not buying it right now, but this one is just too good for me to sell. Booking Holdings continues to bolster their stock price through aggressive buyback action, so this one has held up well. In the restaurant category, I continue to hold Texas Roadhouse. This has been one of the most profitable investments I've ever made. But Texas Roadhouse was one of the first companies that I looked at that sounded the alarm of a slowing consumer. In the real estate category, I have a smaller holding, but it's still one to mention here, which is Vici. I currently own about $7,000 of this stock, and I've made in total around $9,000 in gains. Overall, my companies are typically high margin. They have great balance sheets. They can weather through economic turmoil. They're trading down in response to consumers being more concerned about the economy. And this isn't just anecdotal data gathered by a company like Lululemon or Texas Roadhouse. This is the consumer economic outlook based on polling data. In this survey of consumer confidence, it came in at 57th place this month, the lowest level since 2022. Now, if I remind you, 2022 was one of the years where the market went way down. Consumers were really discouraged. It was also one of the best times to buy stocks, but we're seeing consumer confidence get back to that point. That marked a decline from 64.7 in February and 79.4 a year ago. So consumer confidence is steadily declining. 2/3 of consumers say they expect higher unemployment in the next year, the highest reading since 2009. Most of the concerns in the survey centered around a darkening outlook for the economy's path ahead. The survey indexed a consumer expectation, which fell 18% in February. On the other hand, families' assessments of their current state of economics slipped by just 2.9%. There's another similar consumer survey done by the Conference Board that painted the same picture. The survey's overall economic sentiment index fell modestly in March, but the forward-looking component plummeted to the lowest level in 12 years. Now, all of this so far is sentiment-driven. We haven't seen as much of it in the hard data. For example, there hasn't been a big rise in layoffs. Unemployment remains in check. Personal spending rose by 0.4% in February from January, less than the 0.5% that the economists had been expecting, but spending is still rising. The comments of CEOs match this consumer sentiment. For example, Lululemon just today reported earnings. The stock is down 15%, and the CEO is giving caution, saying people are spending less money. Now, in most cases, I notice that CEOs love to blame the macro environment when things slow down, but they attribute any type of growth to their own brilliance and execution. It's one of those things where they like to take credit when the company does well, but blame the overall economy when their company does poorly. That's what the majority of CEOs do. But in this case, I actually believe that the CEO is being mostly honest here. The problems that Lululemon are facing are mostly macro-driven. Now, all of this seems very gloomy and bearish, but we do have someone that gives a different perspective. Tom Lee is typically bullish in most situations, and in this case, it's no different. He sees this as another buying opportunity, and he compares it to 2018.
That all happened around February 2018. So really that coincided with that first low that was made in 2018, and the market began to stage its recovery. I don't blame any business or investor for saying, look, there's so much uncertainty, I can't make a decision. I think that's why Rick Rieder's talking about animals in hibernation. But as we start to think about the second half of this year, first of all, we've already had the collapse in sentiment. We've seen $850 billion of cash raised over the past year on money market balances. And then in the second half, we're looking for possibly tax reform, which really propelled stocks in 2017. So I think that the odds of a V-shaped recovery in stocks that come after April 2 is just extremely high, because we've already sequenced a lot of the panic that people saw in 2018. I think it's already taken place.
He believes that there's going to be a V-shaped recovery after April 2nd. Now, what happens on April 2nd? That's when the Trump administration says that they're going to release their overall plan on tariffs. And it will be a day that gives more clarity on the tariff policies so that businesses can have a little bit more forecasting so that they can accurately plan ahead. So a lot of investors and especially business leaders are looking towards April 2nd. But Tom Lee believes that after April 2nd, we'll have what's called a V-shaped recovery. As you'd imagine, a V-shaped recovery just means that the stock market goes back up just as fast as it came down. So in a couple months, we could be back to all-time highs. He also comments on the Mag 7 and how these companies have sold off during the downturn.
You know, it's been a self-amplifying downturn, right? Because we've been worried about AI as a bubble and the CoreWeave IPO at a time when we have tariff uncertainty. So I could see it as a very convenient reason why investors have actually avoided Mag 7, and it's been the group that kind of really led the downturn. But it is a cyclical trade too, because I think once investor confidence returns and they're going to start to buy stocks, the Mag 7 are not only the best companies, but they're the most liquid, and they've really derated.
When I look at companies like Amazon and assess whether or not these companies are going to get harmed in an economic downturn, of course their metrics will go down. If we go into a recession or unemployment goes up and people don't have as much buying power or confidence to spend, Amazon will earn less money. They'll earn less revenue. So of course that will affect Amazon. But the bigger, more important picture here is that every company like Amazon, as an investment, shouldn't be viewed in isolation. Amazon is not just its own company competing in its own world, it's competing with other companies. And typically market leaders like Amazon that have the most convenient, cheapest services are the ones that do better during downturns, not worse. Amazon will actively take market share from competitors during downturns, just like Walmart. Just like Costco, these large aggregate value leaders will likely take more market share from the more expensive alternatives during a downturn. Netflix is currently down $39 or 4% today, and I don't think that Netflix is going to be impacted much at all during a downturn. Even if we went into a big recession, I consider Netflix to be one of the cheapest forms of entertainment, with an $8 per month ad tier plan. Even in difficult economic environments, the majority of families can't afford that, and they'll continue to prioritize their Netflix subscription over other forms of expensive entertainment. So having a portfolio of value-oriented offerings steals market share during downturns. They don't lose it. So even though we're going through a year that may become discouraging if the market doesn't do well and companies' earnings are less than expected, keep in mind the relative performance of your companies compared to their many competitors. It's more important that your companies outcompete competitors, continue to gain market share, and they're a much stronger position for when the recovery inevitably happens. Now moving on, we get to the news that I find rather shocking. This was something that really caught me off guard. I was taken aback by it. We had news late yesterday that President Trump had decided to pardon the Nikola founder, Trevor Milton. Now, Trevor Milton was a person that started Nikola, this EV company. In fact, it was a hydrogen vehicle company, and it was supposed to be a big competitor to Tesla. The only problem is they weren't really selling any vehicles. They didn't really have any strict agreements on the vehicles. Most of the revenue they generated was self-serving revenue, meaning they were selling products to their own company employees. This was a company that raised money off of a foundation of lies, exaggerations, and not telling the truth of the current state of the technology, the IP, the order backlog, and so on. Nikola stock has completely collapsed. As predicted, this company declared Chapter 11 bankruptcy. They have far more debts than their assets. They have no cash flow. This was never a real revenue-generating or profit-generating company. It was a cash incineration machine. Here's the free cash flow line of this company. You can see that the chart is upside down. Well, it's not really upside down. They're really just burning hundreds of millions of dollars per year. At one point, burning up to $800 million in a single 4-quarter period. Now, not to mention, they also paid themselves in stock-based compensation. So while they're raising money from investors, burning their cash, not producing any profits, they're also paying their employees and, of course, the executives huge bonuses and salaries, hundreds of millions of dollars worth. To fund this type of operation, you have to have a continually increasing share count, and you saw that dramatically with Nikola. We see early companies, ones that are in the starting phase, dilute a little bit, so this isn't abnormal in and of itself, but the extent of the dilution does raise red flags. Going from 14.6 million shares up to 51 million is an incredible increase in share count. Investors are being dramatically diluted. Now, Nikola was a terrible company, but being a terrible company isn't illegal. There's nothing morally or inherently wrong with a company that's unprofitable and struggling. That's the nature of capitalism. There's many companies that simply can't make it despite the best efforts from the management and investors. So this wasn't something where the company was a bad company, therefore the founder should go to jail. That's not how this system works. The issue with Nikola and Trevor Milton was that they dramatically misrepresented the current state of the company in multiple and meaningful ways by making false, misleading statements directly to investing public through social media and television, print, podcasts, and interviews. Milton made these false, misleading statements regarding Nikola's products and capabilities to induce retail investors to purchase Nikola stock. Milton took advantage of the fact that Nikola went public by merging with a special purchase acquisition company, or a SPAC. We know in almost every case, SPACs are almost always terrible investments to begin with, but this one was especially bad. Rather than through the traditional IPO, by making many of his false and misleading claims during a period where he would have not been allowed to make public statements under rules of governing IPOs. So he intentionally went through the SPAC so he could make promises and pump up the stock in a way that you can't do if you IPO. Milton made false claims regarding nearly all aspects of Nikola's business, including false and misleading statements about the company and the early success of creating a fully functioning semi-truck prototype known as the Nikola One, when Milton knew the prototype was inoperable. He made false and misleading statements when Nikola had engineered and built an electric hydrogen-powered pickup truck known as the Badger from the, quote, ground up, using Nikola's parts and technology, when Milton knew that that was not true. Now, they don't mention this here, but not only did he know that wasn't true, but Nikola basically used the designs someone else made, and all of it was a mock-up. So he says that they built this from the ground up, and they had nothing but a Photoshop rendering. He made false misleading statements that Nikola was producing hydrogen and was doing so at a reduced cost, when Milton knew that in fact no hydrogen was being produced at all by Nikola at any cost. He made false misleading claims that they had reservations made for future delivery of Nikola semi-trucks that were binding orders, representing billions in revenue, when the vast majority of those orders could be canceled at any time, therefore making them not binding. Trevor, Milton, and Nikola described the Nikola One, one of their biggest vehicles, as, quote, a fully functional and works, which is really incredible. In fact, the Nikola One prototype was never completed and never functioned. Rather, the prototype was wholly missing significant parts, including gears and motors and control systems, the system that communicates the driver's directions to the vehicle, and other significant systems were missing or incomplete. Later in January of 2018, and despite the fact that the Nikola One prototype was never completed and operational, Milton published on Twitter, and also published in his own Twitter account, a video in which the Nikola One appeared to be driving on its own power down a road with no incline. In fact, to film these clips, Nikola One was towed to the top of a hill, at which point the driver released the brakes and the truck rolled down a hill until it was being brought to the stop sign. And then it stopped in front of the stop sign. Now, I reviewed this video. I put it on my YouTube channel at the time to demonstrate how incredibly and intentionally misleading this video was to investors. Not only was it filmed where it looked like it was driving, but in some angles that the camera had, it looked like it was driving uphill, like it was going up an incline. They intentionally angled the camera to make it look like this thing was driving, when in reality, it was rolling down a hill. And to try to cover their tracks, they said the video title was technically the Nikola One in motion, but we never said it was driving, we just said it was in motion. That's the type of gimmicks and games this company played with real investors and real money. They tried to defend themselves by saying the video technically said it was the Nikola One in motion, not driving. Milton also made false and misleading statements about Nikola's business and technology to a particular individual as part of an effort to use Nikola's stock to make purchases, even when Milton was subject to a lockup and so could not yet sell his stock. Specifically, Milton made misrepresentations about Nikola's business to an individual in order to induce that individual to accept options to purchase Nikola stock, the value of which had already been inflated by Milton's scheme to defraud retail investors, in lieu of cash for the purchase of a substantial ranch in Utah. Now again, sometimes life isn't fair, and companies that go belly up, the owner still makes some money in the process. That can happen legally. But to put this in perspective, this ranch was funded by investors buying into his now defunct stock on the premise of all the things he was saying. They were buying into the story and the narrative that he was sharing. He was saying that the company was in good shape, it had all these good things going. He was painting a very positive picture, which investors invested in, and he would sell those shares and buy expensive stuff for himself. And now he's pardoned. Here he is on Twitter announcing his pardon with a selfie video.
What's up, guys? Oh my gosh. You won't believe just what happened. Sorry, it's pretty hard for me to talk about, but probably the best day I've had in 5 years. I just got a call from the President of the United States on my phone, and he signed my full and unconditional pardon of innocence. I am free. The prosecutors can no longer hurt me. They can't destroy my family. They can't rip everything away from me. They can't ruin my life. I get to be with my wife now. I get to be with my family. It is done. It's over.
Right away, he starts off with this emotional approach, that it's all about his family and not tearing apart his family. And these evil prosecutors that were coming after him and his family. It makes you almost feel bad for him. Of course he wants to be with his family. But Trevor, nobody wanted to hurt your family. No one wanted to tear apart your family. We have laws and regulations regarding how public company officials should act, specifically that they shouldn't lie to investors. Typically, when people break those rules routinely and egregiously, it goes under investigation. While he emphasizes that his family is no longer going to be torn apart by these investigators, it's also important to emphasize that there were victims in this crime. The Manhattan U.S. Attorney's Office, when it obtained the indictment against Milton in 2021, said that some investors defrauded by his scheme, quote, suffered tens or even hundreds of thousands of dollars in losses, including in certain cases, the loss of their retirement savings or funds that had been borrowed to invest in Nikola. So while we don't want to tear apart families, that's not the goal of enforcing laws, it's important to protect investors against lying CEOs. There's also some questionable things about this case. For example, Milton recently made significant donations to Republicans in 2024, including a $920,000 donation to the Trump 47 committee. We don't know if this donation had any impact on the decision, but it does give a bad perception here. We also know that the new U.S. State Attorney General, Pam Bondi, has a brother. His name is Brad Bondi. Brad Bondi is a defense attorney specializing in litigation and white collar and investigations. And one of the clients he was defending was none other than Trevor Milton. Do we know if that relationship played a role? Not right now, but it does give the perception. And overall, with Trevor Milton, you can argue this either way, but I think the best thing he can do now is not try to relitigate this case like he's trying to show how he was really innocent the whole time and it was the evil prosecutors that came after him. I think he should just take it in stride. He got lucky here. That's what happened. In some cases, you have luck happen to you in life, and with this one, he literally got a get out of jail free card. In most cases, you use that metaphorically. In this case, it's quite literally a get out of jail free card. He had a massive break here, and hopefully he learned something from it. Now moving on, we get to the news that the chat app Discord is working with Goldman Sachs and JP Morgan on planning an IPO. The company says it could IPO as soon as this year, but like many planned IPOs, they could change plans, especially if the macro environment starts to look really bad. So we don't know for sure, nothing's set in stone here, but I want to explain why I would likely buy the Discord IPO. We can first of all look at the exponential growth of this company. Between 2020 and 2024, Discord's revenue quadrupled to more than $600 million on an annualized basis. The company makes money by charging $3 to $10 monthly for their subscription to premium features like custom emojis, larger content upload sizes. They have this product called Discord Nitro that's incredibly popular. A lot of people do it to unlock these premium features. The Nitro product is doing remarkably well, said the chief technology officer. So that's all we know about the IPO so far. We don't know if this really is going to happen, but I do believe that this is a company that I'll be incredibly interested in and likely have a position in if they IPO. I believe that there's a lot of qualities about Discord that are not seen in just the press releases and especially with what management is releasing. For example, Discord is not just a gaming chat application. After 2020, Discord grew dramatically to over 150 million people using it actively. The communities that engage on Discord are not just in gaming. They're in all different forms of communities, from ones talking about culture and movies, ones talking about product and development, ones talking about coding, ones talking about finance. In my Patreon, we have a Discord community. It's not centered around gaming at all. And Discord is also siloed. Companies like Reddit have all of their content exposed. All of their communities are, for the most part, public, where Discord has private servers. All the conversations that are happening on Discord are owned by Discord. They're able to see those conversations, they're able to monetize that data, and they're able to sell it to third-party companies. Whereas you have other companies, again, like Reddit, that have that data, but it's exposed to the world. So Discord has this treasure trove of private conversations and data happening every single day on all their various servers. Now, Discord, again, is talked about as being just this gaming company, and so far they're integrating advertisements and different deals with gaming companies, but as they grow, Discord's going to identify that a lot of their communities are centered around different topics. And I believe that if you have a community on Discord that is not centered around gaming, but is instead centered around investing, instead of integrating with gaming companies, they may integrate with different investment companies. They may have different products or different features or different ways of advertising specific to the community that they're engaged in. So I see ample ways for Discord to monetize. Another thing that this company's doing is becoming a direct competitor to Patreon. Patreon is a payment processor. It's a way that you can pay creators for digital content, and Discord is trying to circumvent them. They have their own payment gateway. So while you have different companies like Shopify, where creators can sell physical goods, you sign up a Shopify account and you can sell your t-shirt and your branded mugs and all your different merch. Discord, in a very similar way, is becoming the Shopify for creators to sell digital goods. Instead of selling t-shirts and mugs, you can sell exclusive content. You can sell community and discussion and video calls and so forth. This has been a territory that Patreon has owned, and Discord is going to take market share as they're offering a similar payment gateway, taking 10% of every transaction. So I see a handful of ways that this company can grow far beyond the current total addressable market of gaming and far beyond even the increases in subscription revenue. If they become a business model where they take transactions of everybody selling digital goods, this company could dramatically increase its revenue. So while it's in the early phases, and of course I'll have to see the valuation and more of the financials as they near IPO, this is one that's very interesting to me. So I'm throwing this out there right now, that Discord is going to be one that I look at very closely during IPO. Now finally we get to the news that younger consumers are choosing creator content over premium TVs and movies. This could be a warning sign for Hollywood. In Deloitte's 19th annual Digital Media Trends Survey, which asks consumers about their media and entertainment preferences, the survey finds that 56% of Gen Z and 43% of millennials surveyed find social media content, quote, more relevant than traditional TV shows and movies. And roughly half feel a stronger personal connection to social media creators than TV personalities or actors. It's the creator-driven engagement that's the draw. Ultimately, what we found and talked a bit about in the report is the notion that they feel stronger personal connections. And what the younger audience is telling us is that they're more influential on their purchasing decisions. They simply believe them more. This is something that we've seen happen over the past decade. There's more and more content creators, people making very specific tailored content, and in many cases, the production of that content is getting better and better, competing with more traditional content. But not only is the production getting better, but more importantly, it's far more specific and tailored and personal to their audience. That's a category that Hollywood cannot compete with. A bunch of Hollywood actors in LA, or wherever they're acting, are not going to be able to come up with as personalized content as millions of YouTubers and TikTokers and people that know their audience demographic incredibly well. It's just an impossible task to compete with. The best thing that Hollywood can do is use the competitive moat they have, which is astronomically high budgeted films, serialized content with professional act and studio quality equipment. That is a category that the creator content can't compete with quite yet. So while there's lots of podcasts and there's lots of daily content, I still think the more premium and prestige content will be owned by the streaming services. And overall, this makes me believe that there's going to be this kind of barbell approach between companies like YouTube that house most of the creators and they aggregate all that demand from creators, and the companies like Netflix and Apple TV, where they have the more prestige, serialized content, long developments and story arcs of character development. Those are the type of things you can't replace, and there's always going to be demand for. So while I see both of these categories winning, I agree with the sentiment here, and I think that investors need to get on board with the fact that the creator economy is growing quickly. That's going to be it for this time. See you in the next one.